Money slips away faster than we realize, and often it's because of simple mistakes we repeat daily. In this video, we'll cover 7 financial mistakes to avoid in 2025 so you can stop wasting cash and start building wealth. Don't forget to subscribe for more smart money and investing tips. In 2025, financial freedom isn't just about earning more. It's about managing what you already have. Many people think building wealth depends on making huge amounts of money, but the reality is that your habits and decisions often play a bigger role. Even if you have a good salary or a side hustle bringing in extra income, wasting money on the wrong things can sabotage your financial growth. The good news? By identifying and avoiding common mistakes, you can keep more of your hard-earned cash, invest wisely, and grow wealth faster than you think. 7. Not setting financial goals. Imagine driving without a destination. You'd waste fuel, time, and energy. That's exactly what happens when you earn money without setting financial goals. Many people work tirelessly, but because they don't define what they're working toward, their money disappears on things that don't matter. Without goals, you may spend on impulse, buying gadgets, dining out, or upgrading your lifestyle, without considering long-term consequences. Goals act as a compass. Do you want to buy a house? Retire early? Travel the world? Build generational wealth? Each requires a different plan. In 2025, you can use apps like Monarch Money, Mint, or even Google Sheets to set financial targets, track progress, and adjust strategies. Break goals into short-term, paying off debt, saving $5,000, medium-term, buying a home, starting a business, and long-term, retirement, wealth building. When your money has a mission, wasteful spending automatically reduces. 6. Neglecting retirement planning. Retirement may feel like a distant dream, but ignoring it is a financial trap. The biggest mistake? Thinking you'll start later. The problem is, later robs you of the most powerful wealth-building force, compound interest. Let's look at 2 people in 2025. Sarah, who starts investing $200 a month at 25, earns 8% annually. By age 65, she has over $600,000. Mark, who waits until 35 to start with the same amount, only has about $280,000. That's a $3,000 and $20,000 difference, just from waiting 10 years. In 2025, with inflation rising and pensions disappearing, you can't afford to skip retirement planning. If you have an employer 401k match, take it. It's free money. If you're self-employed, open a Roth IRA or SEP IRA. Even if you start small, consistency matters more than size. Think of it this way. Your future self will either thank you for planting seeds early or struggle because you wasted time. 5. Overspending on lifestyle upgrades. This mistake is subtle but deadly. Lifestyle inflation. When you earn more, it feels natural to spend more. Got a raise? Time for a new car. Got a bonus? Upgrade the phone. Earned more on your side hustle? Book that luxury vacation. The problem isn't rewarding yourself, it's making every new dollar an excuse to spend. If your lifestyle rises with your income, you'll never build wealth. Many people with 6-figure incomes still live paycheck to paycheck because they constantly chase the next upgrade. In 2025, with social media flooding your feed with luxury cars, designer clothes, and exotic travel, it's tempting to compare. But remember, much of what you see is financed with debt, not cash. True financial success is living below your means, investing the difference, and letting money work for you. A simple rule: every time your income increases, put 50% of the raise into savings or investments before upgrading your lifestyle. That way, you enjoy progress without sabotaging your future. 4. Ignoring investments. Saving money is important, but keeping all of it in a traditional savings account is a silent wealth killer. Inflation eats away at your purchasing power, meaning your $1,000 today may only be worth $920 in 5 years if inflation averages 3%. In 2025, investing is no longer optional, it's essential. Fortunately, access to investments has never been easier. You can buy fractional shares of big companies, invest in ETFs that track the S&P 500, or even use robo-advisors like Betterment or Wealthfront to automate everything. The key is to start early and be consistent. A simple strategy for beginners is the 80 by 20 approach. 80% in safe, diversified investments, index funds, ETFs, bonds. 20% in higher risk, higher reward opportunities, stocks, crypto, real estate. Don't let fear keep you on the sidelines. The wealthy aren't just savers, they're investors. Saving protects your money, but investing multiplies it. 3. Not building an emergency fund. Life doesn't always go according to plan. A job loss, a medical bill, or even something as small as a flat tire can derail finances if you're unprepared. Without an emergency fund, most people resort to credit cards or loans, trapping them in debt. In 2025, with rising living costs, financial experts recommend keeping at least 3 to 6 months of essential expenses in a high-yield savings account. This cushion keeps you from panicking when life happens. Think about it. Would you feel more secure knowing you have $5,000 ready for emergencies? That safety net not only protects you financially, but also reduces stress, improves decision-making, and gives you freedom to focus on bigger goals like investing and wealth building. Start small. Save $25 or $50 a week. Over a year, that's $200, $2,500, enough to cover most unexpected bills without going into debt. 2. Relying too much on credit cards. Credit cards are convenient, but they can be dangerous. In 2025, with average interest rates above 20%, carrying a balance is like setting your money on fire. A $1,000 balance could take years to pay off if you only make minimum payments, and you'd likely pay hundreds in interest. Many people fall into the trap of thinking, it's only a small balance, but debt grows fast. The longer you keep it, the more it controls your financial future. The solution? Use credit cards as a tool, not a crutch. Pay balances in full each month. Treat them like debit cards. Never spend more than you already have in cash. If you struggle with control, switch to cash or debit until you build discipline. Credit cards should work for you by offering rewards and cash back, not against you by chaining you to endless interest payments. 1. Living without a budget. The number one financial mistake, bigger than any other, is living without a budget. A budget isn't a punishment, it's a plan. Without one, money disappears without you realizing it. You think you're bad with money, but in reality, you're just flying blind. In 2025, budgeting is easier than ever. Apps like YNAB, Mint, or even Google Sheets let you track every dollar in real time. A good budget gives every dollar a job: rent, groceries, savings, investments, entertainment. When your money has a role, it stops leaking into unnecessary expenses. Think of a budget as your personal roadmap. If you follow it, you'll always know where your money goes, avoid debt, and consistently work toward goals. If you ignore it, you'll always wonder why you work hard but feel broke. Those are the 7 money mistakes you must avoid if you want to secure your financial future in 2025. Remember, fixing even one bad habit can save you thousands and put you on the path to financial success. Don't let your hard-earned money slip away. Take control and start making smarter choices today. If this video helped you, hit like, share it with someone who needs financial guidance, and subscribe for more powerful tips to grow your wealth and avoid money traps.